Friends, welcome to my channel and thanks for watching this video. Another volatile market session has ended in the US market, and there are lots of things that are now visible if you are looking not only the US market but also in the global market as well. So let us discuss the important aspects and the things which we are going to see that will impact the stock market going forward. So welcome to another session of USA Weekly Market Report. But before starting the video, if you haven't yet subscribed my channel, hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notifications. So if you are screening through the news section or website, so there are a couple of things that I want to highlight. Otherwise you can go and up and down. So the thing is, on the global front, we have the new variant, we have the geopolitical tension. And when we are talking about geopolitical tension, it is the conflict between the US and the Ukraine. And then we have central bank policies that is most relevant to the stock market. And if you enter into the stock market, you again have two things. Number one, yields. Number two, commodities. And if you are looking at the economic side, you have inflation. So these are all the things which are now impacting the market and makes it much more volatile. Now, if you are going into the core of that, what you can see that until and unless the US market changed or the US central bank changed its stance, we cannot have any respite and we have to deal with this volatility. Now, volatility does not only means the market is going to be on the downside. What it means here is the moves on both the side in the stock market. If you're talking about index or stocks, you will see bigger moves either on the upside or on the downside, which make things scary. So this is what we have here. And as far as the important number is concerned, so the consumer price index CPI is reported Thursday and the headline number is expected at 7.2%, the hottest since 1982. So this is where the crux is, and until and unless the central bank thinks that we have done enough and now the inflation is in our control, obviously this will happen. Now there is a connection with the new variant. One, things normalizes in the society or across the globe, and because there are still lots of supply constraints, so one things eases in the society as well as on the global economy front, you will see an ease off that's going to be visible as far as the inflation is concerned, which will have an impact on other things as well. But till then, we have to deal with it. So this is a headline, or these are the important things which you need to look or take a care about. Now let's quickly go to the market and let's see what has happened as far as the Friday is concerned. So you can see Nasdaq is 219 points up, Dow Jones 21 points down. Then you have VIX, which is more than 20, still down, but it is 23, so it's a big number. VIX trading above 23 obviously makes the market super volatile. The yield, the 10-year bond yield at 1.91, nearly very near to 2%. So this is another thing. Then you have oil, commodity, and commodity is something which I've been talking about in the past. and this is the time when, because the commodity super cycle is on, so you will see a rise in commodity prices. Apart from that, you can see natural gas, other things, and probably silver is looks very interesting over here. And all the treasuries are moving higher. You have a US dollar index, which is also standing very strong above 95. So it is also showing positive strength. So there are lots of things which are happening. So let's quickly analyze one after another. So what we can do today, we will start with the US at 10-year yield. I think that's very important to discuss over here, because that is what is moving higher and it is quite visible, right? So let's go and check it out. Now, as you can see over here, this is the chart of US 10-year bond yield, and there is a sharp spike. As you can see, that is clearly visible as far as the chart is concerned. And when things are normalizing, it is moving back to its 2019 highs, or towards the highs of 2019. So let me show it to you. And this is quite normal, I would say. Okay. Market need not to be very perturbed until and unless it moves like 5 or 6%. Probably it won't happen. Otherwise, there will be a big shift in the global stock market, right? So on the downside, you have 1.31, 1.44, 1.71, and everything is crossed. Then your next target will be 2.05. Then you have a 2.66, and the higher end of the range is 3.25. So these are the things. I am not considering this section, because this is unusual times, and because of swift policy changes, this sharp downtick has happened. So I'm not considering that. Otherwise, if you just remove this section, you will see a flat chart and where we are moving as far as the US 10-year yield is concerned, which simply means if yields are higher, financials are going to benefit out of it. Okay, so this is what it means. And so this is what you need to look at as far as the US 10-year bond yield is concerned. And probably there will be, or the higher end of the range is yet to be seen. Next, as I told you, I was very interested in silver, and silver is something which indeed looks very, very stable as of now. So let us see. So this is the price chart of silver futures, to be specific. It can go to as long as 1970, I suppose, 1973. Now, if you are looking at the price chart of silver, you will see a breakout has happened above this level. Then we have, so here we are, couple of levels on the downside, and this is what we have as far as the upper end of the range is concerned. So silver is now sustaining above 21.78. So if it continues to do so, first look at the downside. You have 14.68 and 11, because these are the two most important levels on the downside. But the way it has moved and sustaining, so if it continues to sustain above 21.8, we then have 36.24, the previous high of 49. So this is what we are expecting overall as far as the chart of silver is concerned. Now, definitely it will take time, because these are not stocks. These are, if you're talking about precious metals like gold and silver, they will have their own cycle and they will move at their own speed. So this is what we have. Now the third important chart is crude, because it is one of the most important components. Now, this is the chart of WTI crude futures, and what you can see over here is a very simple trend, but I would say quite interesting, because the way I see the chart, if it is going to happen in the same way as we are going to discuss, then believe me, at a certain point there will be a shakeout in the market. There will definitely be a shakeout. So this is the weekly chart of WTI crude, and now it is sustaining above comfortably, or very comfortably above 62 and 77. Also, it has just now surpassed, here we are, 87 as well. What do we have next? Here we are. So this is the range, which means the next two targets for crude futures will be 108 and 115 or 16. Okay, if it continues to sustain above 87. So we are talking about some very big levels of 2012, and there is also an extension. There is also an extension, because if it moves beyond $116, there will be an extension towards $149, $150. So the chart simply looks like it is reversing back and or moving back from the lower end to the higher end of the range. So definitely there will be a shakeout, which is very much visible as far as the chart is concerned. Now let's go to our important Nasdaq and Dow Jones. So Nasdaq Composite, because of some dismal performances, we have seen huge volatility, or huge bout of volatility as far as the Nasdaq is concerned, but the overall trend is intact. Okay, because index is a combination, so the overall range or trend is impact. And if there is a shakeout, fine. Okay, people have enjoyed huge amount of profit, so nobody can expect or analyze the market in a way that he or she can pick and choose each and every swing and say that this is the top, this is the bottom, and every time they are going to be correct. That's never going to happen. So you have to live with the volatility, and if things again turns better, we will again look into it. So here we are. So here we have, this is how things looks like as far as the Nasdaq is concerned. Because of this volatility, you have too big, I'm not saying it is going down towards 11,000 or 8,000. I'm talking only about the possibilities. Either these two are your big supports, because right now Nasdaq is currently taking support at 13,000. Okay, or it should move again, or if it start trading above 15,200, then we can say that it is out of the range and a new range has now formed. Okay, so there are lots of ifs and buts. First support 13,177, below which we have 11,000 and 9,000, but if it continues to trade above 13,000, we have to see whether it is moving back towards 15,210 or not. Talking about Dow Jones, which are making some serious moves, it is not visible as far as the weekly chart is concerned. So this is the daily chart, and the moves are very big. Okay, for if you're looking at the intraday session, although the good thing is this is all happening within the trend or the range, right? So here we are. This is the upper end of the range, and so this is what your trend looks like as far as Dow Jones is concerned. On the downside, we have 34,000, we have 33,770, and we have 33,300. Whereas on the upside, we have 37,000 and 37,700. So this is how things looks like as of now. So as I've started my video by saying, what is more relevant to stock market is central bank. And macroeconomics front, we have inflation, and plus because we are in a commodity super cycle, so the rise of commodity impact stock market in a different manner, and now you will see the sectors which have not performed in the past, they will now start performing. So there will be some interesting pockets that will come out even with this volatility. And as I told you, this is not like picking up anything in the dark and you will get rewarded. You have to be selective in this particular market, and you have to deal with volatility going forward. So this is the end of the video. Thanks for watching.